Hi team, so in this video we are going to cover basic market structure. Okay, so just obviously what we are essentially going to end up looking at is something like this. This will be kind of like the end game. You are being able to identify your own zones and zones within zones, high probability zones, so you can be more consistent within your trading. So like I say, we're going to focus on basic market structure first. So if you are quite experienced, then obviously feel free to skip this video. But if you'd like to kind of go through the basics of market structure, then that's what we're going to do in this video. So I'll select the path. So obviously we're going to be looking at kind of the different types of market structure there is. So your uptrend, okay. Then you've got your ranging. And then you have your downtrend as well. All right, I know they're not all level, but just so you know what we're looking at. So like I say, your uptrend. Okay, why is this an uptrend? Because price is breaking structure. Okay, it's taking this higher high, creating new higher highs, and continuing to push up. All right, uptrend. Price is going up. Ranging, it's going sideways or consolidating. You can say it that way. And downtrend, obviously, price is taking the previous lows and creating new lows and continuing on a downtrend. Price is going down. Right? So what is price actually doing? What do we see price always do? Okay, price pushes up, it pulls back, it pushes up, it pulls back, and then it pushes up again. So we want to be getting in on these pullbacks. All right. So ideally you want to get in this sort of area here. So like I say, let's write this out so it's easier. Higher highs. All right, higher highs and higher lows. Come on, text. There we go. So we'll just say this is the 4 hour time frame at the moment because we're on the 4 hour time frame. I like trading the 4 hour time frame because it's like the higher time frames are higher probability, but obviously you don't want to be having a 4 hour zone as your zone because you will have a massively wide stop loss and it won't be suitable for your risk management because if this isn't guaranteed, price can always reverse and then start going onto a downtrend or range and then go onto a downtrend, so price could always take you out. Okay, but we use the 4 hour zones and zones within zones to get the higher probability trades, but again, it's not 100%. Nothing is 100% in trading. There's always risk in trading. Okay, so we are now looking at price is breaking structure. Okay, so then price has broken structure. Okay, and it's starting to pull back. This is going to be our strong low. Now, why is that a strong low? It's a strong low because price has pushed up and it's taking this high. Okay, taking this high, and we are now a strong low. So then we're expecting price to pull back because that's what it always does. Okay, price always pulls back and then push up, pull back, push up when it's trending. That's exactly what price does. So this is our strong low, and we will write strong low down here. Strong low. Let's make it bigger. And then this becomes our weak high, and I'll show you why in a second. But this is essentially our range, right? So price has started to pull back this way. Okay, so we'll pretend that that isn't there for now, and price is pulling back. So this is the range that we want to trade within. Now we won't get too too confused with fibs and things just yet, but because obviously you can, once that reaction starts pulling back, there will be times that you'll be able to get confirmation and start selling on the way back to the 4-hour zone. But for the moment, let's just focus on kind of simple market structure and why we're getting into the buys. But yeah, so price will pull back. Again, we'll expect this low to hold because it's a strong low because of this breaking structure, and then we'd expect it to touch into a point of interest or a zone, supplies, a demand zone, and then push and take that high and continue onto an uptrend, right? So that's it in its simplest form, all right? That's the basics of it. I'm not going to get technical yet. I'm not going to go too far with it, but that's just basics, okay? And then price is ranging here, okay? Creating equal highs and equal lows. Okay, so there's like here when price is ranging, you just kind of really you want to leave it alone. I don't like getting in on a range. You always want to try and find the equal highs. Equal lows. Okay. Ranging. Consolidating. Okay. Uptrend. All right. Let's make these a little bit bigger. And then we've got the downtrend. All right. So it's a higher low. And a lower low. Downtrend. Okay, so simple market structure. Again, with the downtrend, similar to the uptrend. Okay, this price is breaking structure. Let's just bring it a bit closer. Price is breaking structure, so BOS, break of structure. Okay, then it's starting to pull back again. So this is our range that we'll be looking at to trade from. Okay, again on the 4-hour time frame, this is our range. Okay, from this higher low to this lower low, that's the range we're looking at trading in. And ideally, we want to be looking at the freshest 4-hour zone. Let's get rid of that for now. Okay, because we're going to anticipate price coming into the freshest 4-hour zone, giving us a reaction, and then pushing past and dropping this and taking this lower low out. All right. And then without getting confusing, you put your stop loss just above the previous high, and then aim for, in its simplest form, aim for the previous low. That's the basics of it. Obviously, we'll go into kind of where to look for taking profits and liquidity and all this sort of stuff in another video. I'm not going to make each video extremely long because I want to make sure that we keep your guys' attention and you can obviously understand what's going on, etc., without kind of losing track of too much. But hopefully this makes sense, and it's exactly what you see on this uptrend, right? So obviously we've got the uptrend here, and as explained on on my chart on this one. So we've got the break of structure here. So this is my break of structure. Okay, we've got the 4-hour zone. That's the 4-hour zone. Obviously, again, we'll break it down into the 15-minute strong low because it broke structure. So this is our strong low because it gave us a break of structure. Price is now starting to pull back. Okay, so we'd class this currently as our week high, and then we will wait for price to essentially pull back here. Okay, now what's this? This is the fib. With the fib, I'll explain this in another video, but obviously with a 50% of fib, because this is the range we are trading in, right? So we want to make sure we're looking for buys on this side of the fib and looking for sells on this side of the fib. So we can look for sells on the way down if we get enough confirmations. So we'll be looking for change of characters. We'll be looking for entries. Mainly on the entries will be on the 1 minute time frame, and we'll show you those in more detail again in a later video. But on its basics, that's kind of what we're looking for, right? On the 4-hour time frame, we've got our freshest zone, 4-hour zone. We've got our freshest 15-minute zone, and that's what we're going to wait for. We're going to wait for price to pull back and push up. Okay, so yeah, it works extremely well. Again, like you can see, even as a live example, fresh 4-hour zone here. All right, price this here broke structure. Okay, so gave a break of structure here. Price pushed up. Price pushed up. This was then going to be our week high. This was going to be our strong low. All right, that's our strong low. Price came in, and again, we could have gone in. All right, I don't recommend having these bigger stop losses because it's a 4-hour time frame. Don't like I say, we'll work on, or we'll go through kind of looking for the freshest zones and stuff. But basically, that's some people can do that. Like you might want to lower your lot size, and maybe you'll have a really low lot size and you'll trade the 4-hour time frame, or whatever's you're comfortable with. You'll have to find what's comfortable for you. But that's kind of essentially it broken down and shown on a live example, right? And then you can have your final TP at the week high there, which did eventually hit over here. All right, but it's not always going to happen. Obviously, price could have easily then pushed up and then decided to take price out. So again, I wouldn't recommend it. It's not 100% accurate, but it does work, right? It's higher probability. As you can see, it does work. It's played out literally there in front of you. And there will be so many more examples that I'll be able to show. Again, right, fresh 4-hour zone. Boom, touched in, took this high, right? Eventually took that high. Price pushed up, gave a break of structure. Gave a break of structure here. Okay. Wrong button. Okay, so price came down, pushed back up, gave a break of structure, so we know it's a strong low. Okay. Price pushed, pulled down, pushed up, gave a break of structure, took this high, okay, and that's what makes it a strong low. Same with here, price pulled back a bit with the grey candle, okay, and then pushed up, gave a break of structure, okay, and it just that's kind of it in its simplest form. You look for a price, wait for price to break structure, and create your freshest zone, and that's your freshest zone. Okay, so I hope that makes sense for you guys. Same here, price pulled down, look, okay, push up, gave a break of structure, which is why we've got this zone highlighted as well. So this will be, again, a strong zone because it's given a massive push and price has broken structure. Now, why are we looking at these zones particularly? Basically, because when you see a massive push like this, it means that kind of the institutions have got in the markets, so they're the ones that move the markets, right? We are just trying to kind of piggyback and take our piece of the pie as such, but they're the ones that move markets. Essentially, which they can't hide which creates these massive fair value gaps, which then price needs to fill. So price fills the fair value gaps and then pushes up again, which is what the pullback is. Okay, so we get the pullback, fills the fair value gap, okay, and pushes back up. Price will pull back, take the fair value gap and push up. Okay, so again, obviously price gave big pushes, big movements here, pulled back, filled the fair value gap and pushed up. Even on the sell on the opposite way, you can, like I say, you can always get in on the pullback as well. Price touched into the freshest 4-hour zone on the pullback, filled these and then pushed up, right? And then I believe we took a trade. We even took a trade on this fresh hour zone, 4-hour zone here. Like this is one trade we did take. Okay, so this was our freshest 4-hour zone here. Why was it our freshest 4-hour zone? Why didn't we trade this zone? Because it had already been mitigated by this candle, right? Why didn't we trade this zone? Because it had already been mitigated by this candle. So this zone was then our freshest zone. Then we found our 15-minute candle within there, and then we traded it. We took some profits from it. So it's always about the 4-hour zones. 4-hour zones are just, yeah, 4-hour zones and the 15 minutes within the 4-hour zones, and then the 1 minute for your entry. But obviously this is almost 20 minutes long now, so I don't want to ramble on just for market structure too much. But that's kind of the basis from it, right? That is it in its simplest form. We're waiting to see price break structure, select the freshest zone, anticipate the pullback, price will react, and then push up. And equal range, ranging, consolidating. I leave ranging and consolidating alone. I don't really like to get in there too much because the probabilities aren't as good. And then on the downtrend, like I say, you always want to try and go with the trend. 4-hour, fresh 4-hour zone. Okay, and we've had a couple of examples there and down here. Okay, so break of structure. Look for the freshest zone that caused the break of structure. That's now your zone. Okay, you will trade that zone and go from there. All right, so market structure, simplest form. Hope you got some value from this, and we will kind of break it down a little bit further in the next video.